Hi, this is Mike, and this is my trading journal for August 1st, 2013. We talk about my trades I made last night and this morning. But first, I want to talk about my trading methodology. Since I've started these videos, I haven't really talked about what I'm looking for or how I manage my trades, what my money management is. So far, I've just been talking about, basically, I've just been reporting what I've been doing in the market. My purpose of making this video about my methodology is simply to put my thoughts in perspective and what I'm thinking as of this date, which is August 1st, 2013. If I post this on the internet, it's going to be there forever. It won't get lost in my records. If I make a video and store it on a hard drive, eventually I'm going to lose it and won't watch it again for a long time. So I just want to keep things in perspective for the future, because for sure, as I progress, I will change. I will change my methods. I will change my setups. I'm sure I'll change my trade management. So this is my methodology. This is how I trade. Everybody's going to have their own. I believe everybody should be unique. Everybody should fit their own personality. I think that's important. Yeah, I'll get into it. So let me talk about that. Let me talk about my money management strategy. Basically, all my positions are going to, my risk is going to be 1% per trade, or less. I will not, under any circumstance, risk more capital than 1% per trade. In the past, I was risking 3 or 4%, sometimes even 5%, but I think that's a losing strategy. I think those losses can quickly amplify and get worse and worse, and each loss, then you'll have to risk more. You have to risk a higher percentage of your account each time you lose, and that's not what I'm into. That's the whole reason I switched from futures to Forex, just so I can have that advantage of taking smaller positions, having more options there. So 1% risk of my total account value per trade. My trade entry setups. Basically, I'm always looking to go with the trend. I'm never looking for quick counter trend moves. I'm always looking to go with the momentum. I base my targets off of measured moves, measured move points, support and resistance, previous highs, previous lows, stuff like that. Yesterday's open, yesterday's close. It's pretty basic, For example, right here, look, it's a strong uptrend. What do I look for? Second entry along somewhere at support or resistance. In this case, it's an uptrend, so I'm looking to enter on support. So right here is at the moving average and trend line, so that's a good support. So all my entries have to be either a support or resistance. Now I'll talk about my trade management. What do I do when I'm in a trade? How do I set my targets? I'll use this as an example, but every trade is different. My first target, I like to scale out of trades first of all. I like to scale out 50% of my trade, and then the other 50 up here. That could change in the future. I might start doing it in thirds. But as of this moment, I'm scaling out 50% and trying to catch a swing on the other 50%. So right here, for example, I entered up here, right there. A lot of people traditionally will say you can take off 50% at 1 times risk. But here's how I interpret this. A lot of the times, actually, let me go back. I'm sorry, I'm just freestyling this whole thing right now. I didn't really prepare anything, but here's how I see it. I like Al Brooks's concept of initial versus actual risk. I'm not sure if that's his concept or not, but I like that concept. I like the idea that the risk actually changes as the trade progresses. With each tick you're getting fed new information, therefore your risk and your targets should naturally change because you're getting more information. So if you leave it static, I don't like that idea. So anyway, what I was talking about, if I entered right here, that second entry long. If I based my first target, if I decided to take 50% off my trade at one times initial risk, which would be all the way up here, that's beyond this swing high right here. Let's say the market decided to stall out and chop around in here, which happens all the time. I would have not been filled. Let's say it made a double top and then turned around and chopped around, or even reversed. I'd be stuck with that full load with 100% position going into it. My goal is I want to take 50% off as soon as I can, within a reasonable level, of course. I believe that even if it decided to chop around, I believe we can at least get up to here. At least get up to this high. So that's why I decided to put my first target off up right here, which is less than one times initial risk. And how I manage this now is, since I took 50% off, now I have the option of I can just leave my target, my stop alone, and leave it alone and let it go, which I do. It depends on the circumstance and what I think the trade's doing, and the trade idea. Or I can adjust it to make it so it basically worst that can happen would be a break-even trade. So basically that's what I did right here. I took 50% off right here, and I simply just tighten my stop to like right there. I did that after I saw this big spike. I decided I can tighten it up a little bit. So now I'm up here. The worst thing that can happen in this trade is break even. So I can just let this thing go. Let me give you another example on the other trade I took last night. Okay, so this trade right here had a big downtrend. This is the euro dollar. Broke this trend line, chopped around, broke the trend line, came back down and tested the low. I figured this could be a major trend reversal, but I'm not too keen on just taking the first entry, so I'll just wait for the second entry. Came down, made it a higher low, so I thought this was decent. I thought we can at least come back up here and test this breakout area or more. But so I decided to take this entry, entered up here with the limit order after it broke higher. Was filled, chopped around, it's pretty crazy. But if I believe we can get up to this, I believe we can get up to this level. So basically, if I went straight up by one time initial risk, my target would have to be up here. I already outlined this. My target would have to be right there. But I want out of 50% of my trade as soon as I hit some profit. So I lowered that first target down to this level right here, and in no time at all, it came up and filled me, and adjusted my risk a little bit. See, that's actually up there. I adjusted it, adjusted my stop, and just let it go. My target was up here at this breakout point, and it chopped around, and bam, went down, and basically a break-even trade. But if I would have left my first target up here, that would have been a losing trade. So that could be the difference between a winner and a loser. And when you lose before you can take half off, you're losing 100% your 100% size, if that makes sense. So that's why I don't look to take the one-time initial risk off. Um, I like to go a little bit. I like to exit a little sooner than that. Sometimes it's necessary, sometimes it's not, but most of the time I do it like that, and I can adjust my stop, so I can ensure myself either break even or a profitable trade. So that's what I do. So anyway, let me talk about what else? Actual risk. So anyway, yeah, I usually just let it go from there, and I base my targets. Like for example, this trade. This is a good breakout point. I thought we'd at least test that, but I was wrong here, and we broke down lower. There's a bunch of crazy news that happened here. Okay, so let me go back. I'll talk about the trades I took last night. I took 3 of them. So to start off, about 11:40 p.m. I took this trade right here, and this trade pissed me off. I made a pretty big mistake here. Get rid of this stuff. As you can tell, we had a decent move up, and with the Forex market, you know, it typically moves a lot more than the S&P or the Nasdaq. I mean, those can move too, depending on the circumstance and what's going on with the news and everything. But you know, if you compare the size of the bars, the size of this whole trend, I think the Forex markets they move a lot more. So I'm trying to get used to that, and I'm also in the trades a lot longer than I was with futures too. So basically, entered right here, shot up, broke out. I was thinking, sweet. I set my my first target, my second target. I hit my first target right down here. I set my first target right here at this red line, and basically had my trend line more like that at the time. And hold on, I was looking at the hourly chart too to try to find an area where there might be some support, or I mean some resistance. And basically, I had a ways. It was up here anyway, but the market shot up and came within like 2 pivots or whatever you pronounce it, within filling me. And you know, you can't even see it. It looked like it was touching my order, but if you zoom in, it was just off by a couple fractional pips. And then it chopped around in here. This whole trade took 3 hours to play out. Broke the trend line. I decided after the break of the trend line, I would just leave my stop as is. I actually adjusted it by that point below this breakout area, and my plan then was to exit on the retest of the high. So I sat through this thing. This whole correction took like 2.5 hours, and we came up here, and by this time I was getting pretty tired of this trade. I made a foolish mistake, and when I saw this bear bar, and I pretty much just dropped in a limit order to exit, which is, looking back, was retarded of me to do that. It was stupid, because my original plan was to get a retest and possibly a new high, and that's what happened right there. Looking back, you know, it was hard for me to even comprehend this trend. You know, I thought this, oh wow, that's a big trend going up. So I wasn't looking at the longer view of what this can potentially happen with this trend. This is what happens. It just kept going and going and going, and you know, coming from just trading like the ES, you know, you rarely see a trend that's that big. So basically, I missed out. I should have just held. It came nowhere near my stop, and I wasn't even able to comprehend this at the time. But all I had to do was adjust my trend line, and look at that. More entries here, more entries there, and I should have just held this thing. But basically, this was the longest day trade type of trade that I've ever taken. I'm not used to holding something for 3 hours. Usually, it's under an hour. So I think I just got frustrated here and decided to exit too early. So this is the Japanese yen. After this, I went to look at the dollar. I mean the euro dollar. So yeah, euro dollar. We had this downtrend coming down, break with the trend line, possible major trend reversal right here. Just a good retest after trend line break. Came back, second entry, maybe major. You can call second entry major trend reversal, whatever you want to call it. I thought it was decent. Took it, exited half right here, chopped around, and then came back down, took me out right here. Basically, it came really close to taking me out right here, but it didn't. I let it roll, came back, took me out. Then we entered some things with the European Central Bank and everything. The market got pretty crazy and chopped around, and it's really violent in here. I just waited for some type of opportunity, and I usually don't enter when the market's like this, but I decided to anyway, just because it made sense. Basically, how I found this trade is I drew this top trend line from these two highs and drug it down here, and I did that while this was forming, and these two lows matched. So I thought, okay, well maybe if it comes back down here, I can look for an entry, but I like to do a second entry. So basically, got the first entry right here, and we pulled back again, and right here I decided to enter. I just entered. I entered with the market order. I was worried about this thing jetting off and leaving me behind, so I just entered at the market. I'm still trying to figure out with Forex what's the best entry. I have been left behind with Forex. I don't like using a stop because then it's hard to, it's kind of hard to determine where you're going to put it because of the bid-ask spread. And with limit orders, I've been mostly entering with limit orders, but I tried to do it. As soon as it ticked higher at all, I just entered at the market and was filled somewhere like right here, and took half off there. Set my swing target up at this breakout point, which turned out to be a good idea. And the market just swung up there quick, relatively quick, I mean, and bam, got that target. By this time, I was exhausted. It was what time was it? It was like 6:30 in the morning. I decided I did pretty good, and I just wanted to call it quits for the day and get some sleep. So that's how I saw it today. Hope this video is not too long, but just wanted to give an example of how I trade, what I look for. Probably leaving some stuff out. I didn't really prepare anything. I just started talking. So anyway, that's it. I'll post it on YouTube right now. And thanks for watching. You stood through this whole thing. Thanks.